In this module, we're going to be taking a look at the first of four trading systems. It's called the 180 Profit Booster, and it's actually the simplest of the four systems, the easiest for you to understand, and it works incredibly well in a trending marketplace. Now, this trading strategy or this trading system uses ringed highs and ringed lows. They're price action patterns that you should be aware of from the Advanced Price Actions module. If you haven't yet seen the Advanced Price Action module, take a look at that now and it'll go through ringed highs and ringed lows to make sure you fully understand how they work. So the ringed highs and the ringed lows are a price action pattern that's called a multi-bar price action pattern, and it takes several bars to actually build the formation. Now, we're going to be using an 8 and 20 moving average, same as before, and there's more information on moving averages in the moving average module. Same thing, if you haven't learned about moving averages yet, go and take a look at that module, or if you need to refresh your memory, just go through it again just to clarify things. But 8 and 20 moving average are being used as a trend filter, and the ringed highs and the ringed lows are going to be used as buy and sell signals in the direction of the trend. So it's a trend-based trading system, and it can be traded on daily or 4-hour charts. Now, you'll know from earlier modules that we don't like to go any lower than a 4-hour chart, because if you go any lower than that, you have to spend a lot of time in front of the screen, and you don't really make that much more money from the amount of time invested. Similarly, we don't really want to go much higher than a daily chart, because as soon as you start looking at weekly and monthly charts, it just takes far too long to get paid. Now, very simply, this trading system is trading ringed highs and ringed lows with the trend. So ringed highs are going to be used in a downward trend, and ringed lows are going to be identified in an upward trend. Now, the standard RRR, where does that come from? Well, the standard reward to risk ratio is 1-to-1. However, it is variable. Now, why do we make it 1-to-1? 1-to-1 is going to give you a better success rate, whereas 2-to-1 will lead to better profits. So you've got the option to change it up to a 2-to-1 reward to risk if you want to. So we made it variable so you can customize it based on your own trading psychology. Now, 1-to-1 being a better success rate means you're going to win more trades. However, the 2-to-1 means that when you win, you'll win double the amount that you're risking. So you have bigger winning trades. Therefore, where there's a pro, there's also a con. So 2-to-1 is going to have bigger winners, but it won't win as often. Now, as I mentioned earlier, you should already be aware of ringed highs and ringed lows from the Advanced Price Action section. If you haven't yet seen that, go back and have a look at that module, and you'll be able to refresh your memory there. Now, even though this can be traded on daily and 4-hour charts, we still recommend that the 180 Profit Booster is traded on the daily time frame. The reason we recommend this is it's just the easiest for you to do when you're first starting out. One new bar each day, one new piece of information each day per currency pair, so it's the least time invested for the best possible return. Also, daily charts will give you a better success rate as opposed to 4-hour charts, because there's less noise on a daily chart, and obviously there's more noise on a smaller time frame on a 4-hour chart. Now, I've got some graphical images here to showcase what we're looking for in an upward trend, and then I've also got a downward trend example to go through, and then we've actually got it in text format so you can see it there as well. But keeping things simple to begin with, looking at the long trade setup first of all. So what you're going to be seeing is, in an upward trend, we need to have that 8 moving average above that 20 moving average. Bearing in mind your 8 moving average is going to be in a yellowy gold colour, and the 20 moving average will be in a blue. 8 above 20, upward trend. That is all that the software looks for, is 8 above 20, upward trend. Therefore, all it's going to look for from then on are the ringed low formations that look like this. Now, it's picking up on the potential ringed low formations, because the potential ringed low formations are where you want to be placing your orders, ideally with price then moving up aggressively in your favour. Now, of course, it's not going to go that way perfectly every single time, but more often than not, you're going to have a winning trade, and if you go for the 2-to-1 reward to risk, you'll have bigger wins than losses. Now, if we look at this so that you can see, the entry level is just above bar 2 of the ringed low formation, and your stop loss is just underneath bar 2 of that ringed low formation. Bearing in mind that the ringed low needs to have that lower high and the lower low. Now, your target's going to be either a 1-to-1 or a 2-to-1 reward to risk ratio. This being the 1-to-1 and this being the 2-to-1. We can tell fairly quickly that the 1-to-1 is going to be more likely to get hit, but if price does get to the 2-to-1 level, then you get the bigger winning trade. And that's exactly what you're looking for in an upward trend. 8 moving average above the 20 moving average and a rings low potential formation. You place the orders, choosing either to go with the default 1-to-1, or if you're feeling like this one's going to go further, going up to a 2-to-1 reward to risk. And once you've placed the orders, there's actually nothing else for you to do, because there's several different permutations. Once you've placed the orders, if the orders don't get triggered, smart charts will automatically cancel those orders for you. Great, that's the first thing. If you do get triggered into the trade, you've got a stop loss and you've got a target. Therefore, you're either going to hit your stop loss or you're going to hit your target. Now, these trades aren't necessarily going to hit target or stop loss in the same day. Very often it will take a couple of bars to get to your target or a couple of bars to get to your stop loss. And we can be looking therefore on a daily chart being in the trade for several days. But if you're making 100 plus pips per trade, then you're not going to be too upset about it. Now, that's fairly simple to start off with, looking at the 180 profit booster in the uptrend. If we now look at a downward trend example, a short trade setup, everything is going to be flipped around on its head, mirror image for the downward trend. And in that downward trend, we want the 8 moving average to be underneath the 20 moving average. So long as we've got the 8 underneath the 20, we've got downward trend. And in the downward trend, we're looking for the ringed high pattern. That ringed high pattern is our short trade setup. It's our sell signal. And you can see here, bar 1 being absolutely anything. And bar 2 has to have that higher high, higher low, meaning that's the potential ringed high pattern. You would then place your orders. And when you push the sell button on smart charts, your order is going to get placed underneath the bar with a stop loss just above the bar. And your target with a 1-to-1 will be this kind of a distance, or a 2-to-1 obviously being a little bit further along. So 1-to-1 target and a 2-to-1 target. As mentioned earlier, 1-to-1 is going to have the better success rate. That's the reason why it's the default target that we recommend when you're first starting out. Because we know when you're first starting, you want to win a lot more than you lose. You want the confidence to keep pushing the button, and that's the reason why that 1-to-1 is the default. And in time, you can move on towards the 2-to-1s. You won't win as often, but you'll win twice as much when you do win. It's up to you. It's your personal preference as to which you choose. 1-to-1's the best thing to start off with, and you can always move on to 2-to-1 in time. Now, if we start to look at the actual rules behind it, the long signal, we would need to have the 8 moving average above the 20 moving average. That means that we're now in an upward trend. So 8 moving average above the 20 moving average, upward trend. We then need that ringed low potential signal, and that means we've now got a buy signal. Therefore, we can now place our order. That's simply done by pushing the buy or the sell button on the smart chart software. Obviously, for a long signal, hitting the buy signal. Now, looking at short trades, 8 moving average below the 20 moving average, that means we're now moving in a downward trend. And in a downward trend, if we get a ringed high potential signal, that's a sell signal, and we can then place the order by hitting the sell button on smart charts. Place the order. If it gets triggered, you get yourself triggered into the trade. If you don't get triggered, smart charts will auto cancel the order for you. Now let's take a look on smart charts now and see exactly how it works and what you're going to be doing. So in the smart chart software, I've already loaded up the 180 profit booster. I'm on the daily chart and I'm on gold. Now I've chosen gold because there's several sell signals on the way down and several buy signals on the way up here for us to take a look at. Starting off, to keep things simple, we'll look at a buy signal to begin with. Now, if we take a look at this buy signal, there's actually several different buy signals through here. I want to zoom in and just go into detail as to why there's a buy signal there. If we first of all assume that this green bar at the very top is bar 1. Now, why am I looking for a ringed high or a ringed low? Because we know that ringed highs and ringed lows give us a move with the trend. Well, we need to know what the trend is, and because the moving averages have just crossed over, as of this point here, we're now in an upward trend. Therefore, this being bar 1, lower high, lower low, this being bar 2. That means that would have been a potential signal. We'd have placed our entry level, and you can see bar 3 did not trigger the trade, so we'd have quite simply had smart charts auto cancel the order for us. No win, no loss, just quite simply we didn't make anything at all. Fair enough, that's going to happen sometimes. So now we're on the next day. Smart charts will assume that's bar 1. Lower high, lower low. Now we have bar 2. We have the ringed low formation, entry level, and we can see bar 3 does not go higher than bar 2. Therefore, again, no win, no loss. You just break even. Looking at the next one now, smart charts assumes the next bar is bar 1. Lower high, lower low. Therefore, this is now bar 2 of that ringed low formation. Now we know that that's bar 2. We place our entry order above bar 2. Our stop loss level is going to go underneath. And our target level on a 1-to-1 at least would be around this kind of an area here. We can then see on the third bar here, this definitely goes higher than the second bar. Therefore, you would be in the trade. And you can see price then goes up to where your target would be and you'd hit your take profit. Now what's interesting is you'll see here that we've got an arrow pointing up that indicates the 180 profit booster signal. So it tells us on this bar, this was a trading signal, you got triggered into the trade, and you can see that you then hit target. And you'll also see the blue dots. You can just make out a red dot underneath, and there's a green dot that I've covered up here already, showing you the entry stops and targets on the Smart Charts software. Looking at another trade over here, we can see bar 1, lower high, lower low. So there's bar 2. Entry level goes on top, stop loss level goes underneath, and your target level goes at a 1-to-1 ratio. And we can tell there we got triggered into the trade, but unfortunately this one worked out to be a losing trade. So we have one winning trade and we have one losing trade example there. So while in this area here you wouldn't have made a huge amount of money, you'd have essentially been break even, it's a good example for me to show you so you can see what a winning trade and what a losing trade looks like. Now, when we get a nice strong trend, this 180 profit booster will work really well. So if we look at the downward trend before this, we can see on the way down, we've had 1, 2, 3 trading signals on the way down. Now, at a 1-to-1 ratio, we can see that we'd have winning trade, and winning trade. And the way that I'm working that out, quite simply, I'm looking at the blue, red, and green dots. And if price gets down to the green dot before it gets to the red dot, well, we know that we won the trade. Therefore, price moved here, took several days to get towards your target level, but you hit your target. Now, on the way down in this downward trend, we're looking at that ringed high pattern. So essentially, on the way down, we need to see bar 2 having the higher high and the higher low. And just taking you through that example so that you can see it, we have bar 1. We have the higher high, we have the higher low, just. Therefore, we have bar 2. We place our entry level just underneath. Our stop loss will just tuck away behind the bar, and our target's going to be down here somewhere. And we can see several days later, we hit target and made some money. And on the way down there, there's 3 winning trades on the way down. 4th winning trade, followed by a loser. Well, you're going to have losing trades from time to time. Now, as we look at that downward trend, how do we know it was a downward trend? Well, quite simply because the 8 moving average was underneath the 20 moving average. So Smart Charts looks for that 8 moving average being underneath the 20 and gives sell signals. Or right now, the 8 moving average being above the 20, it's giving us a buy signal. I can actually go ahead and place that buy signal now. And if I place that buy signal, it's not going to be looking at this bar here because this bar is still moving around. It's still the current bar. What it's going to do is base it off the last close bar, which means my entry level would be around here. My stop loss level would go underneath and my target level is going to go up here somewhere. If I go ahead and place that order now so that you can see, I hover my cursor over the buy button, left click, and it will work out 1% of my accounts. It'll work out the volume for me, my entry, stop and target. I click OK, and we can see the entry, the stop loss, and the take profit on the screen. Nice and simple process to place a trade, or in this case, place the order. Bearing in mind with this 180 profit booster, you're always going to be placing an order because we don't know exactly when the trades are going to get triggered. And the beauty of an order is that you haven't got to be there all day waiting for it. You can place an order just like this, walk away from the screen, come back tomorrow, and you can see whether or not you've been triggered into the trade. Now, if you wanted to change your target, you can drag and drop it on the screen. Left click, hold and drag, and you can try and approximate where you want it to go. You can say yes, you want to move your target. You've got that option. If we look now at actually increasing our target automatically, we hover over the plus button on the left hand side of the screen here, and if we hover over that plus button and actually click on that plus button, we're going to get some extra options for this 180 profit booster. We can see we can now change our risk. Well, we're going to leave our risk at 1%. We can change our moving averages if we want to. Well, let's leave them alone for now. We know that they work. The entry and the stop loss is basically saying entering and stop loss 1 pip either side of the bar. And the target is what I'd like to draw your attention to, because the target there, we can see it says target 1 times the reward to risk ratio. Well, if we just take a look at some of these green dots are going to move now as I change this number. So I change it up to a 2-to-1 reward to risk. We can see now that the trades would be winning twice as much as the initial risk. If I go ahead and place the order again now, but with that 2 reward and 1 risk, we can see that while I'm still risking 1% of the account, the monetary amounts have now changed and the target level is now higher on this buy signal. So we can see now I'd be risking £2,000 if it goes wrong, but I'd be looking to make £4,000 for a winning trade. As soon as I click the OK button, the orders have been placed, entry, stop loss and take profit. We can see, rather than having to approximate where the target is, Smart Charts has worked out exactly where the 2-to-1 reward to risk level is. And by changing the 2 reward level in here, we can now see all these green dots that have moved. We can work out now which trades won the 2-to-1. And all of a sudden now you can see these trades that have gone 2-to-1, you can see why we've got bigger profits if we trade at a 2-to-1 reward to risk. But of course those trades will take longer to get to their target level. So in summary, with that 180 profit booster, it works really well in a trending marketplace. It uses the 8 and the 20 moving average to determine trend. If the 8 moving average is above the 20 moving average, it considers the market's in an uptrend. If the 8's below the 20, it assumes that we're in a downward trend and looks for sell signals. Now, what are the buy and the sell signals? The buy signals are the ringed lows on the way up, and the sell signals are the ringed highs on the way down. If you need to refresh on those ringed highs and ringed lows, again, take a look at that advanced price action pattern module and you'll be able to familiarize yourself with what a ringed low and a ringed high looks like. You've got the choice of a 1-to-1 reward to risk or a 2-to-1 reward to risk. We recommend the 1-to-1 initially because you're going to have a higher success rate, but you can always move on to the 2-to-1 reward to risk in time as you choose. In this module, we're going to be taking a look at the forex income wave. Now this is a highly profitable trading system with a really strong, solid success rate. In fact, it's actually my favourite of the 4 systems. Now, the income wave is going to be using high and low test bars that you should have seen previously from the advanced price action pattern section. If you haven't learned about low test bars and high test bars yet, just take a moment, go back and look at the advanced price action module just to refresh your memory and make sure you know exactly what they are, because they're really strong signals and they give you really good trading opportunities in the forex markets. Now, this forex income wave uses the high and the low test bars to trade a trend, and the trend that it's trading is using the 8 and the 20 moving average. Now, as I just said with regards to the high and the low test bars, same thing with these moving averages. If you're not sure what moving averages are, take a moment, go back and look at the moving average module, and you'll be able to refresh your memory or learn what moving averages actually are and how to use them. But nice and simply, all we're saying is when the 8 moving average is above the 20 moving average, we've got ourselves an upward trend. 8 moving average beneath the 20 moving average, we've got ourselves a downward trend. And don't worry, I've got some diagrams here, and we're going to look at some charts as well, so you can see what I'm talking about there. Now, similar to the 180 profit booster, this is a trend-based trading system, and it picks the turn from the end of phase 2 to the beginning of phase 1. And if you remember your cycles, that's the beginning of the move with the trend. Now, the reward to risk ratio is 1 to 1. It's not variable, it's just designed to be left as a 1 to 1 reward to risk ratio because it's designed to give a really solid, strong success rate. Now, with this forex income wave, we strongly recommend that you stick with the daily charts. And if you're new to trading, or you've only been trading for a couple of months, I'd strongly suggest that you stick to those daily charts for as many of the systems as possible, but the income wave is probably the best system to get started with. You can also trade on a 4-hour chart if you choose to, but as soon as you go down to a 4-hour chart, there's a bit more noise, the success rate is affected. You're just going to find yourself getting more consistent returns off of a daily time frame. Now, talking about these high and low test bars, these 8 and 20 moving averages, what does it all look like? Well, a long trade setup is when we have the 8 moving average above the 20 moving average. And you can see here on the diagram, 8 EMA needs to be above that 20 EMA. So 8 EMA will be in the gold, yellowy colour, and the 20 moving average is usually shown in blue. 8 above 20, upward trend. Now, in the upward trend, the software smart chart is only looking for low test bars, because low test bars tell us price is likely to go up. And if price is likely to go up in an upward trend, well, that's a great place for you to get into the marketplace. Now, what on earth does all this text at the top here mean? All this text at the top here is basically saying that price has to pull back to the moving averages. Now, what does that look like? Well, if you get a low test bar somewhere up here, Smart Charts isn't going to give you a signal because it's saying you're still in the phase 2, price hasn't pulled back down to the moving average yet. But if you get a signal anywhere around here at all, where price is touching the 8 moving average or below, it could even be down here somewhere, we've got a valid signal and we're looking at the beginning of phase 1 again, back to the upside in the direction of the upward trend with the market's momentum. Now, this is the lowest frequency system of the 4, and this system really is the epitome of quality over quantity. You're not going to have that many signals, but the ones that you do have are really good quality signals. Flipping this on its head now and looking at a downward trend and looking at the short trade setups, in a downward trend, 8 moving average needs to be underneath that 20 moving average. So 8 moving average under the 20, Smart Chart sees it as being a downward trend. And in that downward trend, Smart Charts is looking for high test bars as a sell signal. Now, similarly to the low test bars and the upward trend, the income wave has got to see price pull back to the moving averages. All that text at the bottom there basically says price has to pull back to the moving averages before it's going to give you a signal. What does that actually look like? Well, if you get a high test bar somewhere around here, you're not going to get a signal. Whereas high test bars that happen up here, they'd all be valid signals for a move back into the direction of the dominant trend. Basically, if the test bar happens too soon, Smart Charts are saying, no, you can't take it yet, you're still in phase 2. It waits for price to pull back to the averages before it gives a signal to give you a higher quality signal. Again, quality over quantity. Now, where are you placing your entries? Where are you placing your stop losses? Where are you placing your targets? Well, in the upward trend, you're going to be buying above the bar. Your stop loss is going to sit underneath that bar. And we know, because we've mentioned this in some of the previous slides, your target's going to be a 1-to-1 reward to risk ratio. That means we haven't got to see price go a very long way to hit our target, and it's going to maintain that nice, strong success rate. In the downward trend, we're going to be looking for a similar thing, but again, a mirror image. So, on the way down, the entry level goes underneath the bar, stop loss level is going to be above the bar, and our target level, whatever that distance there is, flipped down, that's our 1-to-1 ratio. And that's what we're going to be targeting. That's our take profit. Now, putting this into text so you can see it all cleanly as to what your long and your short signals. In the long type of trade to begin with, the 8 moving average has got to be above the 20 moving average. That's our simple trend filter, and that says, yep, we're in an upward trend, look for buy signals. Now, price has got to pull back to at least that 8 moving average before you're going to get a signal, but it says, right, we're no longer in phase 2, we're about to go into the phase 1. The low test bars in the upward trend are a potential buy signal. So if you think about this, what we've got ourselves a market moving up by price pulling back down to the moving average. We're now saying, right, phase 2 is now ended and we're looking for the move back into phase 1. And we're looking down here for a low test bar signal to give us that move back in the direction of the dominant trend. When we get that low test bar, that's when we place our order. And again, we're going to be entering above the low test bar to buy above the bar, stop loss underneath the bar, and targeting a 1-to-1 reward to risk. The short signals, quite simply a mirror image. So on the way down, 8 moving average needs to be underneath that 20 moving average. So 8 underneath 20 means market is moving down. Same as before, the price has got to pull back to that 8 moving average. Price pulls back to that 8 moving average. We're saying, right, phase 2 is now over and we're likely to go back into phase 1. Then, of course, we're looking for our price action pattern, which is the high test bar. We get the high test bar, that's a signal to sell, which we'll place our orders on. And if we get triggered into the trade, ultimately, we're going to be targeting a 1-to-1 reward to risk. And because we've got a good success rate, we have a positive expectancy. We expect to win when we place our orders. It's a really solid, satisfying feeling when you place an order and you expect to win the trade. Not something whereby it's a 50-50, where you know when you place the order, more often than not, you're going to be winning. And if you're winning trades, you're making money. Now let's jump onto smart charts and see exactly what that looks like and how you're going to be trading it on the software. Now, I'm on the Euro Yen on a daily chart on the income wave trading system. And I've got the income wave on Euro Yen here because we've got a nice upward trend to look at. We've got the change of trend. We've got downward trend to look at through here as well. So we've got some different signals that we can look at for both buy signals and sell signals. Now, I actually want to draw your attention first of all to something that's not actually a signal. Something that could have potentially been a signal, but one of the criteria wasn't actually met. I'm going to be zooming in and taking a look at this low test bar here. Because while we've got ourselves the upward trend where the yellow is above the blue, we've got ourselves an upward trend there, we've got ourselves a low test bar, unfortunately price hasn't pulled back to the average. So if we zoom in so we can see a little bit better. Lovely low test bar, but it hadn't pulled back to the average. And that's the reason why there's no blue arrow giving a buy signal. There's no arrow there at all. That's not something you want to be trading. So that low test bar, almost everything was correct, but it hadn't quite pulled back to the moving average. Now, if we fast forward and take a look at what actually was a signal up here, we can clearly see that we've got ourselves this red low test bar, and in fact we've actually got a green low test bar next to it. Now, why are we looking at low test bars? Very simply because the 8 moving average here is above the 20 moving average. So we want to be buying. If we want to be buying, we're looking for that low test bar. Now, looking at both of these low test bars, why have we only got one arrow? Well, with that low test bar there, you'd have placed your entry order just above the bar, your stop loss would have gone just underneath the bar, and your target level would be flipped up to around this kind of a level here. And we can see with that red low test bar there, open and close are in the top half of the bar, and in fact in this example, open and close are actually in the top third of the bar as well. Now, this green bar goes a little bit higher than this red bar, so you'd initially get triggered into the trade here. You'd be really scared through this point, but you'd still be in the trade. Take several days to get there, but price does then get to your target level. So you'd be happy, you'd make your 1-to-1 reward to risk, you'd make a 1% gain. Now, why is it that that trade triggers but the next one doesn't? Well, if we zoom in again and take a look, we can see with this low test bar, the green bar just goes higher than the red bar, so you'd be in the trade. With this low test bar, this bar that does not go higher. So when we place the entry order here, we wouldn't have been triggered into the trade. We'd have placed an order, but we wouldn't unfortunately have been triggered. But hey, we've still had one trade, one win. There's nothing to complain about there. But you can see what I'm saying when we're talking about low frequency. There's quite a few bars there and there's only the one signal. But hey, one signal, one win. Good starting point. Now, you'll notice that in this sideways patch here, Smart Charts hasn't picked up any of the signals there at all. It said, you know what? Market's not trending, there is no trade. As we move across to this downward trend now, we can see those moving averages crossing over. And as the 8 goes underneath that 20 moving average, now we're saying we want to find sell signals, we want to find high test bars. And there's a really good signal here, or almost signal to look at first of all. And of course, I'm talking about the high test bar there. Lovely high test bar, lovely downward trend, 8 moving average in the yellow colour there is underneath that 20 moving average. So why on earth isn't it a signal? Well, it's not a signal because the bar hadn't pulled back to the moving average. It hadn't had enough of a phase 2 to warrant being a trading signal. It's a shame that you missed out there, but while you missed out on a daily chart, you probably got something through that period on a 4-hour chart, so it's nothing to worry about too much. Again, remember this system is low frequency. So no trade, but ultimately no loss either, which is quite nice. As we move along in this downward trend, we get the first of our sell signals that we're going to take a look at. And I'm going to zoom in and take a look at that high test bar in a bit of a better clarity so we can really see what's going on. Now, taking a look at this high test bar, I'm going to highlight it for you so you can see. There's the high test bar. Now, the 8 moving average in the yellow is underneath the 20 moving average, which is blue. And while they're not pointing down amazingly, it's still a valid trading signal because prices pull back to the moving averages and we expect the trend to continue. So what happens? Well, with that high test bar, we'd be placing our entry level 1 pip underneath that bar. And you can see that corresponds with the blue dot that Smart Charts puts on the screen as well. Our stop loss is going to go just behind the bar. And our target level is going to be a 1-to-1 ratio of that, so exactly the same distance. And we can see what happens here is price actually opens up, moves down throughout the day, triggers you into your trade, hits your target level, goes a little bit further, but something obviously happens throughout the day to push it back up again. But you don't mind, you've already hit your target, you're out, and you've made your money. Now, we get another high test bar over here. This would have been a valid trading signal. However, unfortunately, the next bar did not go lower than this bar, therefore you didn't get triggered into the trade. But hey, a missed opportunity is better than a losing trade. At least we've had 2 trades so far and 2 winners. As we progress a little bit further, we'll see, as we look at this next patch, we've got several signals here side by side that are obvious winning trades. And if we just go and analyse those so that you can see, we're happy that we've got the 8 moving average underneath that 20 moving average. Overall, the market is moving to the downside, so we want to sell. And if we want to sell, we're looking in this area for high test bars. Colour of the bar doesn't matter at all, but you can see both of these examples are off of a red bar. So here's your first high test bar, entry level goes underneath, and you got triggered into the trade. Now, while that trade's still running towards this target, the next day, while you're in this first trade, you actually get another high test bar as well, which you can quite happily place that order to. So that means you've now got this trade running and you've got this order placed. Day 3 comes along, you've been triggered into that second order and that's become a trade now. So you've got 2 trades running simultaneously. What's quite nice is we hit target on the first trade. So here we are hitting target on the first trade at this level. We're happy there. And a day later, the second trade hits target as well. So overall, a nice chart to look at because we can see while it's a low frequency system, we've had, in fact, looking at that, we've had 1 trade in the upward trend that won, and we've had 3 trades on the way down that have all won. Low frequency, but you can see what I'm saying when I'm talking about a high success rate. So to summarise for you, with this income wave, lowest frequency system of the 4. The absolute best one to start out with when you're first getting into the trading world because it gives you the best success rate of the 4 systems. We're looking at high test bars in a downward trend and we're looking at low test bars in the upward trend. Smart Charts will find those for you, but bearing in mind that those high test and low test bars have got to have pulled back to the moving averages, otherwise the phase 2 is not yet over. Provided the price gives you a signal and it's pulled back to the moving averages, you're going to get a trade that's going to be a green flashing signal, and you can go ahead, place your orders, and we're expecting to win far more trades than we lose. Now, it's recommended that you trade this on a daily chart. It's a far better system on a daily chart. If you do opt for a 4-hour chart, think about it a little bit more, because on a 4-hour chart, you can't take every single trade, because every single trade will there be trades throughout the night. Whereas a daily chart, you can take every single signal, because there's only one new trade each day.
With this trend tracker trading system, it uses patterns in cyclicity to produce trading signals, and this specific pattern that it's using, it's called a head and shoulders pattern, or an inverted or an inverse head and shoulders pattern. Now, the trend tracker is designed to trade trends. As a result, it has two moving averages on the screen. A 50 and a 100 EMA are used as a trend filter. Now, sticking with the same theme as the other trading systems in the Learn Forex course, the reward to risk ratio is a 1-to-1. And the take profit inside the smart chart software will say 1.0 RRR. That's a 1.0 reward to risk ratio in the smart charts settings. Now, Trend Tracker is traded on 30-minute charts exclusively and can be traded at any time of day or night. So whenever you want the trade, Trend Tracker will be able to find some opportunities for you. Now, for buy signals, price has to create an inverse head and shoulders, whereas for sell signals, it has to just create the head and shoulders pattern. Focusing on buy signals first of all, we need to have a specific 5-phase structure to produce these buy signals. Now, I'll play this animation a couple of times so that you can see the structure. And that's the pattern that Smart Charts is looking for. And we're going to go into more detail on this on the next slide, but just play this animation again so you can see it. I'll just point out exactly when Smart Charts will find the signal. Now, that's when Smart Charts will find the signal for you. So we need most of the structure to be in place, and it's just before that big leg up at the end, that's when the Smart Chart software will find the buy signal and it'll be flashing in green on the software. Of course, the 50 moving average needs to be above the 100 moving average in order to have buy signals. And really, you want to make sure that those red and green lines are diagonally pointing to the upside, that is in an upward trend, or diagonally pointing to the downside if you're in a downward trend. If we've got a sideways market, the name kind of gives it away, but Trend Tracker is designed to trade trends. In a sideways market, it's going to cost you some money. So make sure you're trading trends with a Trend Tracker, and you don't want to be in a sideways marketplace. Now, we can see that what happens here, this inverted head and shoulders, we have this first shoulder, then we have the head, and then we have the second shoulder. And this is the point where Smart Charts finds the signal, and we need to have this pattern in place. Now, more specifically here now, I've got the different numbers here, 1, 2, 3, 4, 5, and 6, as the high and low points that have been used to create this structure. And basically, step by step, 2 must be lower than 1. 3 must be higher than 2. 4 must be lower than both 2 and 3. 5 has to be between 3 and 4. And 6 has to be between 4 and 5. That's all explained for you here. So you can see 50 needs to be above 100, 1 to start the pattern, and everything that I just said on the previous slide is mentioned there for you. Now the entry is 2 pips above step 5, so if we go and look at where 5 is, the entry is 2 pips above here, and the stop loss is actually 10 pips tucked away underneath 4. So it's 10 pips further down from here. Now the reason for that is we're deliberately making sure that we're keeping the order safe. We're keeping our stop loss safe, out of harm's way. If there is any kind of a false breakout or a small move down there, we want to make sure that our trade doesn't get stopped out for the sake of a couple of pips. And expiry time wise, you can just place the order and come back later on in the day and amend it yourselves. But otherwise, you can place an expiry of anything from 6 to 12 hours on the Trend Tracker. It depends on how long you're willing to leave your orders valid for. Anything from 6 to 12 hours is a reasonable amount of time. If the order hasn't triggered inside of 12 hours, it probably isn't going to. Now for the short side, the sell signals, this time we're looking for the head and shoulders pattern, not the inverted head and shoulders pattern. Again, these 5-phase structure here is required for the signal. And basically we have to have this in a downward trend, so the 50 needs to be underneath the 100, and we have this shoulder, head, shoulder pattern. And it's this point here where smart charts will find the signal, tell you it's a sell signal, flashing green, telling you to sell, and then you're looking for that next move down from there. Now you can do this as a 1-to-1 reward to risk, or if you really want to, you could take it up to a 2-to-1 reward to risk, but 1-to-1 reward to risk is the default. And here we can see that structural pattern again for the downside, and the explanation behind that here basically being 1's the start of the pattern, 2 has to be higher than 1, 3 has to be lower than 2, or therefore 3 also has to be higher than 3 doesn't have to be higher than 1. So 3 has to be lower than 2, but 3 could be down here, 3 could be lower than 1. So 1's the start, 2 must be higher than 1, 3 must be lower than 2, 4 has to be higher than 2, 5 then basically has to be lower than 4, and 6 must be in between 4 and 5. Ready for that next move down again. And it's all explained through there so that you can see. Entry again, 2 pips below 0.5 this time, and stop loss as before, 10 pips tucked away up there to keep it safe. And then targeting a 1-to-1. You could go as far as a 2-to-1 if you wanted to. You don't want to target any more than a 2-to-1 though. An expiry time, anything from 6 to 12 hours makes sense. Now looking at some real examples now in the smart chart software. So I'm looking at the trend tracker now in the smart chart software. I'm on gold on a 30-minute chart, and you can see that I've got my 50 and my 100 moving average in place. Now I've stuck with a default target of a 1.0 reward to risk ratio. I'll just show you the structure that's been created here to produce these signals. So we have this first initial impulse move up, then we have the first shoulder. This is the inverted head and shoulders because it's an upward trend. So inverse shoulder 1, here's the head, here's the second shoulder here now, and we can see the bicycle. If I just move this arrow out of the way, we can see the entry level through here, 2 pips above that level there, stop loss 10 pips underneath the major low, and the target level there being a 1-to-1 reward to risk. Unfortunately, it doesn't quite get there through this impulse move here. You have to sit through some pain first before it does get there, but it gets the target in the end, which is the important thing. We have this secondary signal here as well, which also would have worked out, but of course you wouldn't take this signal if you were already in this signal. You take one trade at a time. And our next pattern through here, we can see if we'd entered here, we'd be triggered into the trade at this point. This is a 30-minute chart, so that's comfortably inside of a 12-hour window. Our target happens and occurs very quickly, but you could always target a 2-to-1 if you wanted to. Now, if we look at the next structure, this big buy signal up here, there's no real reason to want to buy that. Now, technically, it meets the rules because we have a shoulder, a head, and a shoulder. The trouble is you're buying so far away from the moving averages. This is an example of a bad trade. It's one that you don't really want to take. The best quality trades are going to occur near the moving averages. And we can see here that there was a signal here that price never triggered, whereas a signal here near the moving averages worked out well. So really we've got to make sure we're looking for the signals near the moving averages. We need to have at least the green line pointing up, and ideally the red line separating away from it as well, although that's not always possible. But definitely we need to have that 100 moving average pointing to the upside to trade this. Now, if we take a look at some of the short signals as well. So looking at these short signals here, just cleaning the screen up a little bit so we can focus on the specific patterns. There's several trades through here, a couple of wins, a couple of losses to kind of go through. If we look at the top left here, I think it's fair to say that you've got the market fairly sideways at this point. You probably wouldn't be taking any of the trades through here when the moving average is close together. They do start to separate through here, and by the time you get this signal over here, you're going to start to get interested in taking these trades, particularly when you've got this to the downside, shoulder, head, shoulder pattern. Entering 2 pips underneath there with a stop loss tucked 10 pips behind it to keep it safe. and targeting that 1-to-1 ratio, you can see price gets there very quickly. Looking at the next signal, just using some different colours to differentiate, we can see the shoulder, the head, and the second shoulder. We're looking to short underneath there. Stop loss again, tuck 10 pips behind it. The target, that 1-to-1 ratio, working out in your favour. And look, in the trend like this, you could take it up to that 2-to-1 reward to risk if you really wanted to. Now, look, we don't just have winning trades, there's also going to be losing trades as well. Let's focus on a losing trade here. We can see there was an entry level. You can see the arrow, the dot was just behind there. The reason for that signal, we have this shoulder, head, and basically at the time, smart charts produced the signal because at this point in time, price was in between this range. So it still thought there was going to be a lower high there. Now, as price then moved above there, it therefore invalidated that signal. Okay, this is where you kind of need to know the difference between a higher high and a lower high. So I'm going to zoom into this and go through it in detail. So originally there was a valid signal there because when the arrow set up, the price was lower than this high point. However, as time progressed, price moved above here. That's when you would then want to cancel your order. Now, smart charts can't do that for you. It's called smart charts, not perfect charts. So you've got to make sure that when you have the signal appearing here, price moves above that previous high there, therefore invalidating the structure. So the shoulder, head. We were thinking this was going to be the shoulder for the next move down. This then moves up beyond that level, cancel the order. If you'd left the order on, you'd have been triggered into the trade, but it never got to target. It would have been a losing position. Okay, so that's just looking through some of the short signals there so that you can see what they look like as well. But that's the trend tracker. It's a 1-to-1 reward to risk. You can take it up to a 2-to-1 reward to risk. The stop loss is tucked 10 pips behind the previous high point when you're selling, or 10 pips underneath the major low point when you're buying. And we're using a 50 and a 100 EMA as a trend filter. Solid trading system, works well in trend. It does not work in a sideways market, so make sure that we've got trend before we trade it.
This volatility reversal system is based around a false breakout approach to trading. Now, it will trade both with and against the trend using a custom price action signal, and it uses fractals to identify trades. It's traded on any time frame from the 15-minute through to the daily charts, and we're looking to capture quick profits from the next short-term shift in momentum. Now, because it's tradable on time frames as low as a 15-minute chart, it can be traded 24 hours a day. And you can choose to trade this as an end-of-day system on the higher time frames, such as the daily chart, or for those of you that are intraday traders, you can get stuck in on the 15-minute, 30-minute, and 1-hour charts throughout the trading day. Now, it's a 1-to-1 reward to risk ratio. The idea is we're only looking for that short-term shift in momentum. This is not designed to trade a breakout, we're trading false breakouts, and some of the best trades occur during sideways markets. The concept behind this volatility reversal, the false breakout, is when we see price move underneath the previous fractal low, it generates a buy signal. Now, if price continues to break out to the downside, this buy signal will cease to exist. But while we have price attempting to break out, it will then produce a volatility reversal signal to buy, and therefore trading it back in the opposing direction, therefore a false breakout to the upside. Again, it's a 1-to-1 reward to risk, and price has to move lower than the previous fractal low. If it continues to break out, the signal will cease to exist. Now, the idea with these false breakouts is they very often occur throughout the trading day and on higher time frames as well, before the major move, which is commonly described as the breakout. So this trading system is not designed to capture big winning trades, it's designed to be a consistent pip collector as the market's in a sideways pattern, or even on the higher time frames, false breaking out in large trading ranges. Similarly, for the short signals, when price breaks out above the previous fractal high, smart charts will then look for a short signal on this volatility reversal trading system. If we now take a look on the smart charts so that we can see what some of the signals look like in real time. I am currently on a 15-minute euro-dollar chart on this volatility reversal trading system. I've got bars on the chart, and I can see several trading signals on the left hand side of the chart, and one right now where we are at current price. Now if we look at the previous trading signals, we can see through here we've had multiple buy and multiple sell signals. Now the reason for them: this sell signal first of all occurred because price tried to break out above the previous fractal high, but it failed to do so. We can see there it failed to break out. Smart charts generated a short signal from the blue dot with a stop loss tucked away behind that bar's high, and we can see that while price took its time to get there, it of course resulted in a winning trade. We also see this next short signal where price tried to break out above the previous fractal high, also gave us a nice little high test bar, which is a nice little added extra, and price then moved to the downside as well. Now the reason for this buy signal down here is that price tried to break out underneath this previous fractal low, failed to do so, and Smart Charts was giving buy signals through here to the upside. Now you can see for yourself that through the large move there, this trading system had no signals. But that's not the point of this trading system. The point of this trading system is to trade the small sideways moves and then use other trading systems to trade the large momentum moves. We can see right now, looking at current price, we have a no trade on the mini terminal. However, that's because we should now be in a buy signal based off of this small inside bar formation, because price broke down underneath this previous fractal low and it's still holding this position. Now, as price then broke above the high of this inside bar, it produced a buy signal, and we're looking to take price back up to this green dot up here. Therefore, we're expecting price to, as it is right now, be in a sideways marketplace. Now, we don't just have to use this volatility reversal on a 15-minute chart. We can quite happily look at higher time frames. So as an example, if we take a look at the pound against the US dollar on a daily chart now, we can see several trading signals on the chart. Price tries to break above the previous fractal high, it fails to do so. The reversal then kicks in, and we see a trade back down to the other side of the trading range. Again, price tries to break out of the trading range, fails to do so. Volatility reversal gives you the buy signal above the potential breakout bar and allows you to trade that false breakout again to the other side of the trading range. Similarly, some of these signals down here, we can see price and the system itself is not afraid to give opposing signals very, very quickly. We have a buy signal, followed a few days later by a sell signal, and both trades resulted in winning positions. So to summarize this volatility reversal, it's a great trading system for a sideways market. It's designed to trade false breakouts on a variety of time frames, from a 15-minute chart all the way through to the D1, the daily chart, and it can be traded on a variety of currency pairs, even in a trend. While it's always going to produce better quality signals in a sideways market, that's where the focus should really be. Sometimes false breakouts with trend do occur, and you could take those trading signals as well. I'm looking at a 15-minute chart of the New Zealand dollar, US dollar, which has got some upward trend and some downward trend. I'm using this chart for good reason, because it gives us some winning signals and some losing signals for us to take a look at and work out why the signals have been generated. First of all, let's focus on a buy signal. A buy signal, like this one here on the left-hand side of the chart, is being produced because of the fact that we had a high fractal and a lower high fractal. So the way that the pip runner produces buy signals, whenever there's a lower high fractal that has been confirmed, pip runner will produce a buy signal. So because this fractal high, this little grey triangle, is lower than the previous one, that's saying it's a cheaper price to buy, therefore it's producing a buy signal. Now the stop loss for the pip runner is the lowest low of the last two fractal lows. So when we're buying here with an entry level, our stop loss is going to sit underneath that area. So our stop loss sits underneath this low point down here. Our take profit on the pip runner is a reward to risk ratio of 1 to 1. We do this for several different reasons. First of all, to make sure that you've got a slightly higher success rate. But I must point out, with the pip runner trading system, you do want to use your discretion to make sure that you're aware what's going on the higher time frames. We all know that the higher time frames control what takes place on the lower time frames. So if you check the higher time frames first to work out your context and direction that you'd like to trade, and then take the signals on the 15-minute chart in that direction. So we're generating this buy signal here because of the lower high. Sell signals are produced when we get a higher low. So here we have a higher low fractal. That's the reason we've generated a sell signal, and we can see the sell signal being produced here with the entry level underneath that fractal and the stop loss to the highest high of the last two fractal high points, which means it sits up above this level here, safely out of harm's way. Again, the take profit level there being a 1-to-1 reward to risk ratio. Now, looking at this chart, the first trade that was a buy signal would have been a winning trade, and the sell signal that we just took a look at now would have also been a winning trade. But I'm keen for you to understand, of course, there's not just going to be winners, there's going to be losing trades as well. So here we have the high fractal and the lower high fractal, which produces a buy signal, and we can see price gets nowhere near to the target level. Now, what's interesting here is, while this buy signal is busy losing, the pip runner produces a sell signal in the opposing direction, which is almost towards the target level now. And we've got a current potential signal setting up on the pip runner because these high points are getting lower. That's the reason we're currently producing a buy signal above this fractal high point here, with a stop loss level sitting underneath these low points down here. Again, it makes sense for the pip runner trading system to make sure that you're aware of the context on the higher time frame first before you pull the trigger on the smaller time frame.